Hi, I'm Morgan Davis, Associate Editor at NexChange, and I'm here today with Hardeep Walia, the founder of Motif Investing. How are you doing today?
Oh, thanks for having me.
Excellent. I know we've talked a lot today about some of the disruptions happening in the financial world, and we saw a lot of things happen, particularly after the financial crisis. What's the next iteration? What's going to happen next?
A lot of what's going to go next is about bringing down cost, improving transparency, and giving investors the control so they can do whatever they want whenever they want. So our company Motif kind of plays into that role. You can think of Motif as a thematic investing platform built around ideas that you can understand. So it's almost a way to invest the way you think. And these expressions of what you want to do kind of take three forms. I might want to invest in drones because I think Jeff Bezos is going to figure out how to deliver packages via drones one day. Or I could be a trader. I want to buy the most beaten down stocks automatically without watching the markets all day. Or I could be a very passive investor and I just want to invest like an Ivy League endowment manager. What we do at Motif is we make these expressions actionable by turning them into a motif. And a motif is a thematically weighted portfolio of up to 30 stocks built around these expressions. You can buy a motif for $9.95. And you know, our customers like to think of as motifs as customizable, no-fee ETFs, but they're not funds. You actually own the underlying securities. And what's nice about this next world we're going into, it is one of empowerment. It is one of I want to know what I invest in. I care about whether I'm passive or active, I still want to know what I'm invested in. And you're seeing a lot of models out there that give you an opportunity to really get an understanding of what it is. And obviously, we're all taught about the compounding of interest payments, but the compounding of costs is a pretty serious thing as well. So we're going to see a world where friction in this financial system is taken away. And those frictions are to the tune of $376 billion. So we're going to see some of that go away, but it's exciting for once to see a ton of innovation come to market. And so we're glad we're part of it.
Who's that innovation coming from? Is it coming from the consumers wanting that customization? Is it coming from Silicon Valley? Where's that cross?
I think there's a combination of things. One is we have a tectonic shift in demographics. We're seeing it in politics. It's actually affecting the financial services industry because you're going to see a lot of people pass on their net worth to the next generation. And there's something of the order of $18 trillion of net worth that's going to be transferred to this millennial generation over the next 10 to 15 years. That's a pretty sizable stake. And the demands of the people leaving this money behind are very different than the people inheriting money. So a lot of it's driven by demographic shifts. And this next generation investor, not exclusively, but they care about what they. We're seeing a rise in impact investing, so they want to make money and do good. It's not a trade-off. It's about ands, not ors. And then the other thing you're seeing is that there's a different level of trust, which is where things like transparency comes in. Because if I don't know what I'm invested in, then it makes me feel very uncomfortable. You've seen it everywhere. You saw the California State Treasurer send a letter to CalPERS saying, why are we invested in gun companies if, as a state, we're not, committed to guns? You see that also with people demanding carbon out of their endowments, their schools' endowments, or out of their portfolio. So you're seeing this interesting shift of, I care about what I'm invested in.
And what are you seeing with Motif as you've developed the company and as you've had more customers come on? How has that changed and grown?
So we're seeing a couple of things. Our early adopters were, and I got this wrong in our business plan, were ultra high net worth retirees. That was just our early adopters. Now we've got a pretty representative sample. I think our median customer is in the early 40s, but we have customers, we have 11-year-olds playing around with our technology as well. But we have a very broad, we skew a little older than the traditional demographic, but we're seeing a good use of Motif for different levels. People who want to be passive investors and just put money to work with no fees. We have a product called Horizon. We don't charge management fees. We don't charge commission. It's hard to get people to believe it because there's so much disbelief in this industry. And for people who don't know what they're doing, we want a very simple product. But there's a range of sophisticated investors. We've got traders who trade a Motif multiple times a day while talking to 20 of their friends. So we've got a platform that can actually cater to a very broad set of customers, and we think that's important because there are a lot of companies out there that have kind of a very narrow product, and customers want a little more breadth.
And what do you see as the response from the financial industry? Is it fear, or are they accepting of this? Where's that going?
Well, I mean, I think one thing I will say, full disclosure, Goldman Sachs and JP Morgan are investors in our company. a lot of large institutions, this is a general comment, really understand there's significant change. I think there's a tendency to think they don't know what's going on in the market. That's actually not true. The challenge is they have big businesses to run, and how do you move an oil tanker? Even when you see a pretty clear trend that's saying you have to adopt your business model. So a lot of them are doing interesting things. We're partnering with the industry. We think they have sizable advantages. But one of the questions I always get is, if you guys from Silicon Valley get unleashed on Wall Street, what's left? And what's left in our mind is there is value in insight. Having a unique perspective on the markets, we see value in that. We see value in the human relationship between a wealth manager and their client. A lot of it is a very emotional relationship to help you cope with the ups and downs of the market. But I'm a software bigot. I believe software will solve world hunger, because it is actually a distribution, not a production problem. But it is hard for complex scenarios of wealth to get tailored financial advice. It is not easy to automate everything yet. But I think for some of the more simple scenarios, there's some great automated advice tools out there, and there's a very important role to play. But I think those are the three things that we think are going to be pillars of this next generation world of investing. And I think everything else, the costs come down dramatically. We're moving to a point where commissions will get very close to zero, if not at zero. And then it's the value of the, we see this in data. There's a low order bit, there's a high order bit. There'll be low value trades and high order trades. And the question is, what's the value of that trade? And we're going to see interesting models develop as you see business models. I think when you look at a lot of the innovations, the question I always ask myself is, well, where's the new disruptive business model? Because that's what the excitement is about.
If the commissions are going lower and we're seeing these fee structure changes, does this mean that the skill sets that the money managers have are going to have to change? Or are there going to be new things that kind of shake out as the core tenets of what they're doing?
So, I think a lot of what money managers will do will look for this insight, right? They'll look for unique ways to invest. A lot of money is managed in kind of this core asset allocation model. We think that will go to zero, and we think software can actually automate that. The skills of a money manager will then be like, what unique perspectives do you have? What unique data? The insight is driven by unique sets of data that you have access to, what views of the market. So I think the job will change. A lot of them are already doing this. So I think but if it is a traditional, very simple, put a model together that software can do, you're going to have to find another way to make a living. But if you are doing what a lot of money managers do, which is look for rich insight, look for perspectives on the market that might be unique, that might be contrarian, I think there's definitely a role in this next gen.
Wonderful. Well, thanks for being with us today.
Thanks for having me.